There's a much bigger factor driving liquidity in Bitcoin today.
What is it?
Well, there are two drivers. One is institutional investors are buying Bitcoin and crypto. Keep in mind that 95% of all Bitcoin has been mined. So there's very little Bitcoin left, 5%. Yes. But, and this is from Bitwise. They had this really great stat, but 95% of institutional investors don't own Bitcoin.
They don't own it?
Yes.
Oh.
So if you think about that, there's only 5% of Bitcoin left.
Yeah.
And 95% of institutions have to buy that 5%. So you can imagine...
That's surprising.
Yeah, you can imagine that will cause an asymptotic rise in Bitcoin's price. That's the first driver.
Oh.
The second driver is that governments are viewing Bitcoin as a reserve asset.
Tom Lee thinks that we are on the brink of a huge rise as the stock market enters a new phase. Lee claims that the circumstances for a huge bull run are coming together just right after months of uncertainty, with inflation slowing and interest rates predicted to decline in 2025. Strong earnings, robust consumer spending, and an increase in liquidity are cited by him as the main factors that might propel equities and cryptocurrencies to all-time highs. Lee claims that this is not merely a temporary recovery, but rather the start of a strong upward trend akin to the bull market of the beginning of the 80s, or the recovery that followed 2009. He contends that despite the overwhelming evidence of growth, investors continue to be overly cautious and hoard capital. In his latest outlook, Tom Lee breaks down why the Federal Reserve's next policy shift, combined with improving liquidity and technological innovation, could spark one of the strongest rallies in modern market history. Stocks, crypto, and even traditional assets could all benefit as optimism returns. If you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
Well, I've been involved with crypto since 2017, and that's when we first wrote about recommending clients buy at least a 1 to 2% position in Bitcoin. And Bitcoin was under $1,000 back then, so it's been a 100x return. And this year, I became quite constructive on Ethereum. Because in our view, I think Ethereum is one of the most important macro super cycles for the next 10 to 15 years. Ethereum's very unique because it is a smart contract platform, and it's censorship resistant and super resilient. It's 100% uptime since creation. It's never been down. And to build a treasury business on Ethereum means that a company, when they acquire a sufficient stake, let's say 5% of the supply, actually has what I call the power law come into effect. And that means that not only do you have a positive influence on yourself as a company because you own so much, just like MicroStrategy, but you have a positive impact on the Ethereum ecosystem itself because, one, you're providing a lot of security by staking, but also you are essentially what you call like a kingmaker, that when you own so much Ethereum that you have a chance to help the DeFi ecosystem flourish. And that means if Wall Street's going to build on Ethereum, a company like BitMine will actually play a role in helping, sort of evolve and identify the right DeFi protocols to flourish. Well, foremost, I still like Bitcoin, and we still recommend it to clients because Bitcoin is, I think, a ideal store of value. So it's digital gold. Yeah. But in 2025, there is a much bigger transformation underway because the White House has really pushed two different agendas. The first is the Genius Act, and that's to essentially greenlight stablecoins. And stablecoins are going to grow dramatically. Today, there's about $280 billion of stablecoins outstanding. Treasury Secretary Bessent thinks it's going to get to close to $4 trillion.
Yeah, he is.
So that's exponential growth. And then there's the SEC's Project Crypto, which is encouraging not only for Wall Street to look at digital assets, but to rebuild Wall Street onto the blockchain. Okay. So this is a dramatic moment where the financial system is essentially moving everything onto a digital platform. The platform that you need, the blockchain, a public chain, needs to be one that has smart contracts. So it's not going to be built on Bitcoin. Wall Street is choosing to do this on Ethereum. So Ethereum is facing a moment that what we call a super cycle, similar to what happened in 1971. when the US dollar went off the gold standard. And that moment is when Wall Street innovated financial products because the dollar became synthetic in 1971. But in 2025, it's now Wall Street essentially digitizing or tokenizing the real world. So Ethereum is unique because, number one, it's the blockchain of choice where Wall Street is building stablecoins and tokenized assets. But Ethereum is a proof of stake blockchain. So Ethereum treasury companies actually earn a staking yield. So, for instance, the Bitmine, roughly $9 billion of Ethereum held, if it was staked, would generate about $300 million in pre-tax net income.
Wow.
So the company is one of the most profitable companies in America today.
Wow. Why would investors need to buy a Bitmine stock instead of just buying Ethereum directly if it's so good?
Yes, that's a great question, because someone's going to say, well, if Ethereum can go up a lot, why don't I just buy Ethereum? And one of the differences is that a digital treasury like Bitmine is actually growing how much Ethereum you have per share. So I'll give you an example. On July 8th, when we closed on that initial transaction for taking over Bitmine, or transforming it to a Bitmine treasury, an Ethereum treasury, there was $4 of Ethereum per share held at Bitmine. So imagine someone could say, I could buy $4 worth of Ethereum or buy one Bitmine share. As of August 24th, Bitmine held $40 of Ethereum per share. So it rose by 10 times. But if someone bought the Ethereum itself, or they bought the Ethereum ETF, they'd still only have $4 of Ethereum per share. So you can see that a treasury company is growing your Ethereum holdings per share. That's why MicroStrategy's stock did better than Bitcoin. In August 2020, MicroStrategy's stock was $13. Today it's $335. It's gone up by more than 25 times.
With its price hovering just around $5,000, Ethereum is once again on the verge of making history. It is just a small distance away from retesting its all-time high from 2021. A perfect mix of institutional demand, ETF inflows, and predictions of rate cuts by the Federal Reserve in 2025 is what's causing this amazing momentum. These factors are working together to increase demand, constrain supply, and move Ethereum closer to a new stage of real price discovery. However, this surge may mark the beginning of a new financial age and is about more than just pricing. Many commentators draw parallels between this period and 1971, when the decoupling of the dollar from gold changed the dynamics of international markets. Ethereum is at the center of a similar shift today, driving the growth of tokenization, which uses blockchain technology to build stablecoins, bonds, stocks, and even real estate. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content before we go any further. Now, let's get into his powerful predictions.
Where do you stand in the debate? Like, have other factors like macroeconomic taken over?
Yes and no. We've written about Bitcoin for a long time, almost 9 years now.
Yeah.
And I've respected the halving cycle because it makes sense. There's a block reward that's shrinking. So therefore that has some effect on mining and the proof of work, and therefore it should have an effect on price and supply.
Yeah.
But that's really a liquidity framework. And liquidity meaning, buying versus selling. There's a much bigger factor driving liquidity in Bitcoin today.
What is it?
Well, there are two drivers. One is institutional investors are buying Bitcoin and crypto. Keep in mind that 95% of all Bitcoin has been mined. So there's very little Bitcoin left, 5%. Yes. But, and this is from Bitwise. They had this really great stat, but 95% of institutional investors don't own Bitcoin.
They don't own it?
Yes.
Oh.
So if you think about that, there's only 5% of Bitcoin left.
Yeah.
And 95% of institutions have to buy that 5%. So you can imagine...
That's surprising.
Yeah, you can imagine that will cause an asymptotic rise in Bitcoin's price. That's the first driver.
Oh.
The second driver is that governments are viewing Bitcoin as a reserve asset. The United States is going to, they're not the only country. El Salvador was the first, really.
Yeah.
And when governments begin to buy Bitcoin, that's another buyer of Bitcoin that I think is bigger than the halving cycle. I think there is always cyclical risk, even with the stock market, because the stock market has bear markets. But my advice to anyone who invests, and this is from Peter Lynch, there's more money lost worrying about a top in the cycle than in buying good ideas.
Oh.
Okay? Meaning, if you're worried about a cycle top, you're missing out on all the upside. So it's better to actually own it for the long term. And I'll give you an example. In Bitcoin's case, as you know, since 2010 or 2009, so now we have 16 years, you've never lost money owning Bitcoin if you held it for 36 months. So even if you have a downturn, as long as you own Bitcoin for 3 years, you'll never lose money. So maybe that's more important than worrying about a downturn.
Yeah, because it's hard to actually hold on for a long time
Yes.
when you see it going down.
Yeah, for instance, when we first read about Bitcoin and it was under 1,000, it went to 20,
Yeah.
and then it went to 15. And then it went, I think, to 50, and then it went to 13, and then it went to 120.
Wow,
So
that's like a really big
yeah,
fluctuation.
but over that period of time, you made 100 times your money.
According to Tom Lee, the actual factors propelling Bitcoin these days are liquidity and demand from new participants joining the market, not merely its halving cycles. He claims that because the halving lowers the amount of new Bitcoin coming into circulation, it does important, but that is just one aspect of a much larger picture. These days, institutional acceptance and governmental recognition are the two main factors driving Bitcoin's long-term growth. Lee claims that there is hardly any new Bitcoin available because nearly 100% of it has already been mined. The fact that 95% of institutional investors still do not own Bitcoin, however, is really astounding. This indicates that there is still a huge surge in demand. The mismatch between the enormous demand and the restricted supply might cause prices to rise if even a small portion of these institutions begin purchasing. Lee highlights that investors may lose out on opportunities that could change their lives if they place an excessive amount of emphasis on short-term market cycles. More money is lost worrying about a top in the cycle than in buying good ideas. To put it another way, people lose more when they are scared to invest than when they persevere through volatility. Even after several crashes, people who have owned Bitcoin for at least 3 years have never experienced financial loss. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.